Hello, everyone. Thank you so much for being here. It is such a pleasure to have Leesa Soulodre as my guest. Leesa, welcome.
Thank you, Alicia. It's such a pleasure to be here.
Where are you now?
I'm at home in Luxembourg,
Okay.
preparing for Christmas with the family, and of course, winding down. We've just signed to be with the Luxembourg Supercomputing Center for the year ahead with our Future Intelligence Lab. So lots and lots of exciting things happening in the home of green finance.
You have a lot of exciting things going on all the time. Leesa, how did you get here? How did you get to do what you're doing now? What
Oh,
happened?
when I joined the military, I had trained as an Alzheimer and dementia nurse. And I thought that if I could get my security training in the military, I'd make a great doctor. Unfortunately, life is never quite how you work out. So I learned to lay communications in the field. And that's my foray into technology. And when I got out of the army as a disabled soldier, I met two very infamous Australian entrepreneurs, Jody Rich and Bradley Keeling, who said that I should go on a wild ride of blitzscaling Australia's telco during deregulation. And so we blitzscaled the company to 10,000 people around the world, and then we listed it on the Australian Stock Exchange. So that was my first foray into technology. I think I was 21 years old at the time.
Wow.
And of course, as every good founder does, you keep taking companies out of your markets to new markets. And at some point, you start chipping checks into the ecosystem to pay it forward. And that's how I got into venture.
Wow. And you lived in several countries. How did you get into Luxembourg?
There was a very wonderful person, now my partner at R3I for the last 5 years, Ian Creswell, headed up the Luxembourg Innovation Agency. And he said, when I came to see him, I was pitching for one of my founders at a competition here. He said, if you come here, I will make everything happen. And so we've been landing and expanding companies all over the world, and we needed a new home after Brexit to land our companies into Europe. And so Luxembourg was the perfect jurisdiction to do that.
So tell us a little bit about what you do, because I know, because we've been doing things together, but tell us about what is it that you're doing now, and then tell us what are you going to do in the future.
We were born out of the Advanced Digital Science Center of Singapore. My partner, Professor Marianne Winslet, is a professor of computer science there for 40 years. And I used to spin stuff out of her lab. And we took a few things out of the lab and we realized that if we just put walls around our house, actually we'd be really, really able to help so many more founders. So we came to this in Singapore, trying to help founders get to the other side of that valley of death. And what we realized is that with our global networks, literally we could bring our ecosystem to whoever it was that needed an ecosystem. So we have built landing pads in Singapore, in Luxembourg, in 5 states across the US. Last year, we launched our Planet 43 program, which is about climate, health, water, and security. And our mission has been to incubate and accelerate companies that are what we call blue moons, the ones that are really going to deliver the game-changing technologies for the future. We realized that by building the picks and shovel companies, we could really help our companies get there faster. But actually, we could become our own bank and we could invest in so many more companies by generating our own revenues.
Yeah, that's so important. We're going through the same path as well. We're looking at market first. How do we get income and revenue very, very fast so the companies that we invest in are not so dependent on investment. So I think that's a big change. And I think we're very much aligned in a lot of ways. And we have some portfolio companies together too. So let me take that back to personal again. Um, if you were to write yourself a letter now to you 20 years ago, with what you know now, what are the lessons that you learned that you didn't know? What would you write to yourself? Dear Leesa, I'm here 20 years later. I want you to know this.
You mean as a VC or as a human?
as a human? This is as a human.
Yeah, well, I've always loved to work. And that's the difference between me and my beautiful French husband, who, do you say works to live? The opposite? So I've always loved to work. It's not work for me, right? It's my way of delivering value to the universe. But I think the one thing that I learned nursing people at the ends of our lives is that at the end of our life, we never wish that we worked more. We wish that we spent more time with the people that we love, that we had deeper relationships, that we had built more memories. And I have constantly sacrificed time with loved ones for work. And now, by having my own firm, I'm able to build the firm in a meaningful way for what it means to me. I'm not at the mercy of anybody else. And to be fair, I've pretty much half my career run my own firms, right? So it wasn't really a new career choice. But sometimes, you're lured away to run somebody else's company. And I think it really reminds me that if I truly want to build intergenerational value, then I need to own that vision, that destiny, and I need to be able to own that opportunity to build quality time with the people that we love. I think the other thing that I've really learned is about values and people, right? We're dealing with money every single day. And I think I find I come from a market that's very transactional. Australia is very transactional. But I live in Europe, and Europe is not at all transactional. But my funds are run out of the US, which is very transactional.
Very transactional, yeah.
And so really rebuilding my LP base, because I came from angel networks, right? I built the Triumph Alumni Angel Network,
Yeah.
220 angels in 43 countries. It's very transactional. But for my fund, I never wanted to have thousands of investors. And that's a luxury, of course. But I just wanted to have 5 good families. Now, we define what we deserve and what our future looks like. And I notice that we're constantly, as women, asked to compromise those ideals simply in order to make bank, right? And I think one of the things that I've learned is not to compromise. Because as soon as you compromise, you don't get what you designed, right? And so I think just staying to course, it's a marathon, and realizing that if you consistently move in the direction of travel and constantly just find that next step, we don't need to know the end of the journey, right? We just need to keep finding that next best step. Sometimes that's good enough. And as Little Miss Overachiever, I've always found that next best step was not good enough for me.
Yeah, like, yeah, me too. It's like, well, but that is good because you go back and you start improving. I'm always thinking, how can I improve? What did I do wrong? How can I make this better? Yeah,
Exactly.
yeah, yeah.
Exactly. And also, I'm in that legacy phase of my life, right? So taking on the next gens and teaching them, helping them understand what we do and how we do it. That's been really important to me. I think a lot of funds want to keep it all quiet because they want to keep managing the money. But I actually think the beauty of this journey is bringing your families with you and having them not just as investors with you, but as co-investors with you. That's a very important journey. And I'm investing in things that, in principle, are longer than a 10-year cycle, right? The frontiers of space are not a 10-year cycle. And so having families that see beyond the 10-year paradigm, that are thinking intergenerationally, that's really important to us. And we're in the world of breakthrough technologies that have transformational impact on society. These things don't happen overnight. And finding ways where we can get the short-term return, right? 1/3 of the portfolio out before Series A in a smart and intelligent fashion while not compromising the intergenerational impact. That's become important to us. So we've really gone out there and built a lot of good friends in very different places in order to ensure that the legacy that we've started can continue. We don't believe in pump and dumps. We are not here to vulture a founder. It has to be a win-win journey along the way. And of course, you have moments where things don't go as expected in a
You don't
startup.
want to
And
kill them. Sometimes you don't want to kill them.
totally.
And sometimes
Um,
they want to kill you. Sometimes they're right in wanting to kill you, but yeah.
Yeah, but you have to live together, right? And we have to make this company a success. And so I've definitely had my journeys on that path over the last years. But anyway, what I digress to say is that I am ever humble and constantly realizing that even if I'm no longer 21 years old, that I'm still making mistakes, right? I'm still falling on my face. I'm still picking myself up. I'm still learning because there has never been more change in a fast period like this ever. And so falling, getting up, that has allowed us to rapidly build an asset base that we would never have had we have just stayed a pure VC emerging manager. Now I
Mm.
have assets. Now I can collateralize. Now I can IPO that part of the company. Now I have optionality. And I think this is so very important, not just for me, but also for those that come on the journey with us, because we all have to be sustainable. And sadly, we've watched half of our industry just go to the valley of death this last year. And also, people so desperate to survive that they're no longer thinking about returns. And so it has been a massive, I'm going to say massive 3 years of learning. I think this is the hardest job I've ever had in my life. And I've done really hard things in my life. This has been crazy. But I think we've never been stronger. And that's, what do they say? What doesn't kill you makes you stronger. I'm definitely strong these days.
Or more humble.
Both.
Because I used to say that, big shocks make you stronger, wiser, and more humble because sometimes you don't make it. Like,
Yeah.
but I had that experience very early in my career. My first and only corporate job, it was with two big corporations, and the company closed down. They were a joint venture, and it was in Venezuela. I was living in Venezuela, and we were working in agriculture, and the land under agricultural management was decreasing 50-80% every single year. So it got to the point that we had the second best technical team. I managed that
Mhm.
in the world, but there was no market for us.
Yeah.
So they decided to close the company, and I had to lay off all of my team. I had people crying. And so to me, just experiencing that at a very young age, knowing that we were the best team technically, but the market just couldn't stand it. And everybody got dispersed into other countries because fortunately we were very good. There was a couple that stayed there. I left the country, but you know, I realize that sometimes failure is an option. You have to be aware of that, and it just makes you more humble, I guess. Yeah. It's been a
You know,
very difficult period. Yeah, for sure.
yeah, honestly, Alicia, I had this one beautiful company. It was in robotics warehouse fulfillment. I love this company. Pre-COVID, I took it into Asia. It was valued at just over $600 million. I always wanted to be on the cap table, but I just cheered from the sidelines, right? Because once it got big enough, there was never room for this little emerging manager on
Yeah.
the cap table, and the government and its parties wouldn't let me in. I watched that founder have their convertible note ripped out from underneath them with no notice. More than 280 families laid off. I had a $50 million ticket that I had rapidly raised from my network to save this company, and it was declined. And this company for 600 million was sold for between 7 and 8 million. And
Wow.
I honestly, just before the summer, I just cried my heart out for this founder because he had built this company 10 years
Hmm.
of his life only to have an agency pull a term sheet. It was tragic. I literally climbed into the French mountains and didn't come back for a week with my family and kids. I just needed to take a breath because, as one entrepreneur to another, you know what it takes.
Yeah.
You know how hard you work, how much you give up to get here. And, there's been this massive transformation of governments coming into companies to play VC. You
Mm-hmm.
see it also with family offices coming into companies to play VC and worse, investment banks. And, the investment banker gets paid no matter how bad the deal is.
Yeah.
And so we have these really changing alignments of incentive. And I think this year I've seen so many down rounds that just should never have been down rounds, where they're taken to the end of the line on cash flow and they're forced to swallow a 75% down round. I'm sitting in one right now where I had a gun put to my head and told, you're going to take 95% discount here, or this company is going to zero. That company's not going to zero. There's no way that that agency is going to let this company go to zero. But we are, as emerging managers, often bullied because we don't have enough ownership. And I just think the human price that is paid in that process, in Victoria, Australia, we rolled out entrepreneurship from kindergarten to university. For every dollar that our entrepreneur is invested, they produce $1.80 in the ecosystem. Generations are inspired by that.
Yeah.
They will go on to become entrepreneurs because dad was an entrepreneur or my uncle was an entrepreneur. The impact that these negative shocks have, especially on small ecosystems,
Mm-hmm.
we have to be cognizant and conscious of that, because without these entrepreneurs, economies don't move forward. So I've spent a lot of this year in quiet reflection. You wouldn't have heard me out there too much because we've been doing a lot of building. And
Yeah.
especially when you're building an agentic AI, you have to do it in stealth, right? Because otherwise someone's going to come and rip it off really quickly. But I think everything from tax incentives to landing pads to, I think, non-dilutive capital provisions, because all the hoops that these kids have to jump through to get that money, 90% of the time it makes absolutely no sense for that company. And I think really just getting our heads around the global capital landscape and understanding what good looks like for us, for our companies, and we can't always protect them, right? But how to build a beautiful network of co-investors, as you can see on the back slide here, who share the vision of what we believe and who share that common alignment of incentive. I think that to me has been probably one of the biggest learnings in this journey. And I think probably the one thing that I take away at the end of this year.
Wow. You thank you for that. What a beautiful reflection, and so humble. And we have had companies that are sold under the table from us, amongst, one fund invests in a company and sells the company at a loss to another portfolio company. And it's completely legal, but, it just wipes out the
Every time.
founders and it wipes out the other investors that participated.
Totally.
Therefore, I have my list of VCs that I don't work with. If they're
Ah,
at the cap table, I don't do that. But it's really interesting to convey the message that not all venture capitalists are vulture capitalists,
yes.
that we have people that have good values and they are aligned. And it's extremely important to pick who you invite. I call it who do you invite to your party? Because it's very important for founders. This is really, really an interesting conversation. I don't know if you know that my dad was a socialist,
Mhm.
staunchly socialist, the romantic type, money corrupts people. And He was a professor at the university, public university. I grew up in a little town, so we really didn't need much money. And we're a big family. We're 5 kids. But when I hear you talk, it makes me reflect on my father. And I think the reason why my father just walked away with a lot of anger and grief was because we had a rice farm and we lost it. And we lost it to capitalists, to lenders,
Yeah.
and also for political reasons, because they wouldn't let us sell our rice, something like that. I was 5. I don't remember that. I do remember the trauma,
Mm.
but it completely shifted the family. And what you reflect upon, the impact it has on society is extremely important. And I would like to add some, positive
Mhm.
call to action to the people that are listening. You might not be able to invest in an entrepreneur, but anybody can help an entrepreneur.
Yes.
Anybody. And sometimes I've been accused of being the cheerleader investor. And I said, I don't need to be an investor to cheer you up.
Yes.
But it is extremely difficult to be an entrepreneur. It's very stressful, and they all need, a tap in the back and say, hey, how are you doing? And buy from them, especially now in Christmas,
Yes.
purchase from an entrepreneur because they really need our help. And as a community, it is healthy for us to nurture those entrepreneurs. That is the reflection that I got from what you just said. It really touched my heart because I know so many entrepreneurs that work so hard and sometimes they can't make it.
Yeah. And, I come from a family of entrepreneurs. We used to own the Aviation Academy in Brisbane. And I just remember one Christmas, my uncle, who led the academy, came home and he didn't have liquidity, right? He was worth millions on the balance sheet, but he didn't have liquidity. And you can have billions in assets, but have absolutely no liquidity. And if you look around right now, that is the challenge that we all have. How do we transform these billions from our balance sheet into liquidity? And that's important, of course, because you're building a sustainable business and you need to show returns to your investors, but also to your family, right? That all these sacrifices and these 20
Yeah.
hours a day actually delivered something. And I think the other thing is, and I watched a lot of families implode this year, right? A lot of divorces this year because being married to an entrepreneur is hard. Like it's exhausting, right?
Being the child of an entrepreneur, my kids still talk to me, but well, we talked about that. You're Sarah and
Yeah.
my Sarah. Yeah, I mean, it's hard.
It's
Yeah.
hard. And so I think one of the things that I've learned is to bring everybody with me, right? My kids join my calls. My daughter does evaluations of my technologies because if I'm investing in something, it's going to affect her, right? She's my stakeholder manager, having a look at what do you really think about this? Even my son, he's 8 years old, What do you think about? We were talking about investments the other night, and he said, I want to invest in drones. And I said, drones that deliver great precision agriculture or drones that kill more people faster with less energy. And he was like, well, we're having wars. Why don't we invest in drones? And then we talked about the downside impacts of investing in specific drones, right? And just walking through that with an 8-year-old to understand what are the upsides and the downsides of making an investment, it's never clear cut. And I think one of the things that everybody has had to grapple with as we go into this world of export controlled assets is what are the unintended consequences and what are the export control risks that live in and around this asset. So this year, we've been on this massive journey of picks and shovels. What are the picks and shovels that we can build? I'm a queen of masters versus robots. So if I want to invest in a founder and that founder is in Norway, but I know nothing about being a director in Norway, how could I automate that so that I actually know everything that I'm supposed to do before I'm supposed to? And so we built a system for that. And then for EU AI Act compliance and like 52 other regulations in the world, how could I automate everything that was high volume, always the same, which is like 80% of a regulation? We completely automated that. And then we said, okay, well, what about water and climate related stuff? Could we automate that as well? So I've been on this massive automation thing this year. And I think as I move forward, right now in Europe, 30% of a round is compliance. 30% of a seed round is compliance. So if I don't have to pay KPMG, who honestly, rolling in thousands of interns into our companies is a big waste of money, right? As our kid is trying to go and get product market fit, but at the same time to sell to a customer, they need compliance. I just realized that I could exchange services for equity. So I don't even need to raise as much money anymore because now I have something to sell. So this year I'm doing services for equity. I've found my founder's balance sheet, right? I can put 17 million in AI algorithms on that balance sheet. I transformed that kid's balance sheet. Now they're eligible for 100 million in non-dilutive grants. So we've started to think more broadly about what are the real assets that we have to trade with. It doesn't always have to be money. It could be access. It could be those algorithms. It could be that data lake. It could be that co-development. And I think that's what has got us so excited here because as soon as we took that back to the portfolio, instead of my founder taking 2 years to deliver product number two, it was done in 4 weeks, right? Our massive compression of cost, massive upside on valuation. Honestly, we've gone back to being builders. And I think that's probably the most exciting thing. And I know everyone says, well, what is your portfolio rate of failure? Ours has been always at like 95%. We've had like a 92 NPS score. They're like, that's not possible and feasible for the long haul. We've supported 350 founders and everyone is pretty happy. So, we always have this philosophy that it doesn't have to be tough out there. We can be kind, right? And kindness
Oh, yeah.
comes in so many ways. And like you said, help a founder. I know a girl, she trades her PowerPoint design skills for equity, right? Founders who don't know how to do a deck. She's out there racking up equity just in return for her PowerPoint skills. People have become very creative, right? As money gets harder and harder to find.
Yeah, yeah. Oh my gosh. I mean, so many lessons in this conversation. This blew my mind because well, actually we're doing the same thing. That's probably why we get along so well. I always ask the founders when they come to talk to us. We don't do pre-seed, but I always ask the founders when they come and talk to us. If I had a magic wand, what can I do for you? And
Right.
they start telling me that they need money. And I said, we don't need money. We need something, and we use money to pay for it. So if we know what we need, we can reduce your uses of fund. You can be much more creative. So we have a lot to do together as well, Leesa. But it's really interesting, and this is one of the big pluses of doing this podcast is that people tend to think because we're venture capitalists that we tend to brag about how much money we invested. And in reality, we want to be very efficient with the money. I love the way you respect money because I respect money a lot. And we get things done, and we get things done because we really care for the founders. And we care for the money too, but it doesn't have to be a compromise. We can do it together. Yeah. What would be your last advice to people that are listening, whether they're founders or investors or just other people?
I just had that conversation with one of my new angels before this call, and he was talking about what does good look like. I think the most important thing for any investor is to understand what you want. What is your aspiration? Are you chasing learning and development in new technologies? Do you really want a very rapid return? Make sure you have the right instrument for your ambition. right? There's a lot of people that came into venture because it was cool, both on the GP side and on the VC side.
Mhm.
Um, really understand the asset class that you are investing in, and of course, diversify, but that's,
Yeah.
and I think bring people with you on that journey. If you are getting returns, I don't know, be it fixed income or public markets or whatever, if it is bringing you joy and you've been able to achieve your personal investment ambition, share that joy with somebody else because it's all always a learning game. So we can all get on the journey
Yeah.
in venture in a way that is meaningful to us, that doesn't kill the bank, that is aligned with the founder's current state of being. Of
Yeah.
course, we do. We want to see these technologies make their impact. We want to see these founders successful. We want to see the communities and societies that they serve receive that impact. So it's a long journey, right? And so, yeah, I would simply say understand who you are, what your ambition is, and what role you would like to play. And if you are having fun, if you are enjoying it, if you're achieving, bring someone else with you.
Wow. Leesa, thank you so very much. It is a pleasure talking to you as usual. I hope to see you in Europe next year. And thank you so much for being here with us.
Thanks for having me.
What a great podcast. Leesa and I go back several years. We are in some groups together. We have shared a ton of deals. We've invested in two companies together with the same aligned values. Let's support the founders and let's create wealth for everybody, not just us. I hope you enjoy this conversation and I'll see you in the next episode. Yours in Wealthing, Alicia Castillo Holley.